Hello and welcome to another update video about Ethereum. Here we are facing a huge head and shoulders potentially, but where are we imminently? So Ethereum is still hovering in this region around $2,800, a little bit up, a little bit down, currently in a descending wedge. Back in November we defined here this target area, which Ethereum already reached around here. Oops, that's wrong. The wrong setting. Need to choose here the Fibonacci retracement levels, and we have here a target area between $1,700. That is where it actually starts, but ideal level here between the 88.7% and the 78.6% Fibonacci level between $2,080 and $2,400. Now, as you can see here, back in January, this target area was reached. Since then, Ethereum hasn't come into it, but what we can see here is now some kind of an ascending wedge, out of which it also broke to the downside or some kind of a channel. With that, it is following Bitcoin. The problem is my current wave count is based on the assumption that we have completed here a higher degree wave 4 in this whole downtrend, that we talked about back in November already, which also worked out. The wave count suggests that we have done a 1, 2, 3. That was the end of January, and then a wave 4 as well, in line with the Bitcoin wave count beginning of April, and that we are now in a wave 5, which will end somewhere down here. That is based on the assumption that we are still here in a wave 1, and the wave 2 is coming very, very shortly. That would be aligned with the breakout out of the descending wedge here to the upside. You never know if it will really break out to the upside, but I think a move up is now imminent. Because it can't just go down in a straight line, and that move up should take us here somewhere into the region between $3,050 and $3,250. That would be the wave 2 ideal retracement levels. From that wave 1, you normally get a retracement in a wave 2 before you then carry on with a sell-off in a wave 3, wave 4 retracement, wave 5 down. That is what the Elliott Wave count currently suggests. There is one alternative scenario. So this is the primary one. The alternative would get triggered if we really move above that wave 4 high. That would be above $3,600, and then we would get into this area before we then, however, would come down. That is currently my view. The more bullish scenario is exactly what I told you here in the beginning, that we defined here a target area between this 78.6 and the 88.7% level. For the completion of the correction, it could theoretically go down to $1,700 without being invalidated. However, the problem is the wave 1 is already quite long, and the Fibonacci extensions and ideal targets suggest that we could drop below the $1,700 level. If that happens, we have to go to the higher level wave count and would have to start the wave count somewhere down here, most likely here around $100, which would then suggest that we could get somewhere here into this region. That I will have to adjust that based on the somewhere here into this region actually. So that would start actually at $670. That's the 88.7% FIB level, and go all the way. So basically I would then have to count that this here is a wave 1, and 1, 2, this possibly another 1, 2. This could then be a wave B, or all of this is the wave 1A, overshooting wave B, pretty much like Bitcoin, coming down in a wave C. So pretty much in line with the Bitcoin wave count, and that would suggest that we would get lower than the $60 or the $1,700 level basically. But because we have then already been below the 61.8% FIB level, it just unlocks lower prices with the real risk that we could get down to $1,200. So this is just what it is, and that is currently suggested by what we are doing here, because this wave down is quite long, and the next price target, the next targets for the next waves here, especially wave 3, would need to be quite a long wave, based on minimum targets for the next wave, and that just means that we will probably drop below $1,700. And I have to say it's around about 50-50. 50-50 if we drop 1700 or hold it, that is my current probability, my current view here. I can't tell you what is primary. Primary view is that we still come lower. How low is really hard to say at the moment. Yeah, the 1700 need to hold. Ideally, what needs to hold is actually not the 1700. Ideally, what you want to hold is here the area here around $2,080. If we drop below 2080, there's a real big risk that we also lose the 1700, because usually when you drop below the 88.7% fib level, it's very unlikely that it still holds. Okay, but at the moment we are still up here, still in the descending wedge. And if I go to the 4-hour chart, you can see that we're pretty much following currently what Bitcoin is doing. And I said it in the Bitcoin video earlier today that personally I don't expect any major moves actually until Wednesday, when we have the Fed decision. There's usually quite a bit of volatility on that day, and we have obviously much more space here in that descending wedge. So in the next step we could drop down here to around 2,700, yeah, and still haven't finished that wave one. It would just become here quite a complex wave actually. That is a lot of overlaps. Could be here a diagonal pattern, yeah, in a wedge obviously, but in my view still in a wave one. There was a chance that this here could already have been the wave two, yeah, that is possible. Then we would already be in the wave three, but it wouldn't align with a Bitcoin wave count. Therefore I'm currently, yeah, my view is we carry on here a little bit in the wedge, will then break out to the upside into the green target area, but that will only happen if we really break out, yeah. So if we break out, when we break out, it can take us with a high probability into this range here between 3,050 and 3,250 US dollars, where we then would find with a high probability a reversal point down. So looking at the here the MACD shows you increasing momentum on the MACD. Yeah, a little bit of sideways movement now, but the MACD line is still going up further. Currently fighting here on the 4-hour chart with the RSI. Currently around 50, pretty much moving sideways. The 8-hour has recently made a bullish crossover, which is bullish, but the RSI is still in the bearish range. And here on the, if that carries on the daily, and we reduce negative momentum step by step, that could be a catalyst for that move up, but we're still quite far away from a potential bullish crossover on the daily MACD. But yeah, the thing is, until we really break out of the wedge, we don't know in which direction it will go. And if we go up from here, yeah, this is my target area. Should we break to the downside, first of all, we need to make sure it's not a fake out. We've had that now many times. But next support to the downside, from my point of view, if we add the VPVR indicator, you can see that support really starts here sort of in the region where you have all this trading going on, or in the past around $2,600. But major support around this fib level here at 2,400. That is the 78.6% Fibonacci level. So primarily, generally lower prices still to be seen. As part of that downtrend, you have this corrective move up before you then sell off further as well. Yeah, that's my view about Ethereum. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. And maybe also my trading course that I currently publish on the website morecryptoonline.com. Thanks a lot for watching. Bye bye.